Here's a shocking statistic. Over 75% of co-signed loans end up being paid by the co-signer, not the original borrower. That's basically signing up to pay someone else's debt.
Those numbers are staggering. What drives so many people to take on that kind of risk?
Well, it's fascinating because most people think they're just lending their good credit score, but the reality is much darker. Banks actually require co-signers when their data shows there's a high probability of default.
You know what's interesting about that? The banking industry has decades of data showing these risks, yet they continue marketing co signing as a helpful solution for families.
Exactly. And here's where it gets really concerning. A recent study showed that 38% of cosigners experienced a drop in their credit score because of late payments they didn't even know about. The average drop was 75 points.
That kind of credit score impact could affect everything from job applications to housing opportunities.
And speaking of broader impacts, let me share something that really opened my eyes. Financial advisors report that relationship damage from cosigning is the number one reason families seek counseling for money related conflicts.
Hmm, that makes me think about all the hidden emotional costs beyond just the financial risks.
You know what's particularly troubling? The legal system treats cosigners as equal parties to the loan. I recently learned about a case where a cosigner had their wages garnished for 5 years after the primary borrower declared bankruptcy.
That's terrifying. How do people protect themselves if they've already co signed?
Well, there are some emergency measures you can take. First, you can request immediate notification of any late payments. Some lenders even allow cosigners to make payments directly if they're worried about the primary borrower falling behind.
Those sound like helpful safeguards, but they still don't address the fundamental risk of being on the hook for the entire amount.
Exactly right. And here's something most people don't realize. Co-signing can affect your debt to income ratio just as much as taking out your own loan. I've seen cases where people couldn't buy homes because of loans they co-signed years ago.
The long term implications are really eye opening. What alternatives would you suggest instead of co signing?
So I've developed what financial planners call the helper's hierarchy. First, consider helping them improve their credit score through authorized user status on a credit card. Second, if you have the means, offer a smaller personal loan with clear terms. Third, help them create a savings plan to build a larger down payment.
That's such a practical approach. It addresses the underlying issues rather than just enabling more debt.
And here's what's really interesting. Data shows that people who work to improve their credit score instead of relying on cosigners are 60% less likely to default on future loans. It's about building financial literacy.
Those statistics really drive home the importance of teaching financial responsibility rather than just providing a quick fix.
You know what else is fascinating? The Federal Trade Commission reports that co-signing disputes make up nearly 15% of all financial family conflicts that end up in court. That's thousands of families torn apart each year over these agreements.
The way you frame it really highlights how co signing can be the beginning of the end for many relationships.
Looking toward the future, experts predict that with rising interest rates and stricter lending requirements, requests for co-signing will likely increase by 30% over the next 2 years. That means more people will face this difficult decision.
Well, this conversation has certainly changed my perspective on what seemed like a simple favor.
And that's really the key takeaway. When it comes to co-signing, what seems like a simple signature can have ripple effects through your finances and relationships for years to come. The best help we can offer is often saying no and finding more sustainable solutions.